Hey, thank you for joining Uncle Mike for this edition of the Dow Directions, a technical analysis of the Dow. Well, you can see that we made up almost the entire ground. This is almost a bearish engulfing candle. If it had just gone a little higher, we would have been bearish engulfing, and a little lower. But be it as it may. Let's take a look at where we have to travel. This is giving us a little hope, but we're certainly not out of the woods yet. We have our T8 at 76.17. I would have liked to see a retracement today or tomorrow, at least up to that level, and hold. We have our 20 EMA at 77.69, which is just below the 38.2 retracement level. So you can see this is going to be tough resistance area right here at 78.45. So right above the 20 EMA. And there's the 50 EMA that I talk about every evening. We need to get above there and hold. You can see that we just pierced it a little bit. Let me bring it into view. We just pierced it a little bit right here for what, 3 days, and then closed below it and could never hold that from 1.7. So we really need to hold that. And here is our 200-day moving average, still coming down. Let's go take a look at some of our items. We did support and resistance. Let's do trend line tonight. Trend line longer term. The most recently confirmed down trend line for the Dow has an ending point of 86.29. So expect prices to have a little difficulty breaking through 86.29. That's a longer term. And a shorter term trend line. The most recently confirmed shorter term trend line has an ending point of 79.45. So right about that 8,000 level. So expect prices to have some difficulty rising above that one first, and then we'll have to deal with the second one longer term after the fact. Okay, what else can we take a look at tonight? Let's throw in something else. Let's look at, let me go pick one here. Let's go look at the trend analysis just in general. On the Arun indicator, the last signal was a sell signal 69 periods ago. No signal since then, and of course we're in still a heck of a downtrend. The directional indicator was not triggered today. The last sell on the directional indicator was 134 periods ago. Based on the MACD, the last signal given was 8 periods ago, and that was a sell signal. The SAR, or stop and reverse, generated a sell signal 16 periods ago. So you can see, depending what type of indicator, they all gave a sell a few periods ago. And kind of as a summary for the Dow, it is below the 200 period, 90, and 30 period moving average, which is very bearish. Let's go to our Chande chart checkup. Prices are downwards. The bias is downwards. We haven't set upwards for a long time. The projected upper bound for the Chande chart checkup is 78.01. The lower bound is 68.44. And now to our Rex Tagasuji profile. To kind of round it out, today we were up 232 points. Volume was 33% above average, and the Bollinger Bands were 6% narrower than normal. For the technical outlooks, in the short term, we're still oversold, but the intermediate and long term are bearish. The 200 period moving average is still in a downtrend, and it is 27% below that trend line. The volume indicators that reflect inflow and outflow of money are mildly bearish at this point in the Dow, and the trend forecasting oscillators are currently bearish for the Dow, and it has looked that way for the last 27 periods. So that's kind of a general indicator comprising of those few that I spoke of there 2 minutes ago. So that's where we are right at this point in the Dow. Again, nice day. Hopefully we can continue and put a few of these together, since we've had 1, 2, 3, 4, 5, 6 down days, 7 almost down days in a row. Thanks for joining Uncle Mike, and I will be back tomorrow night with a new edition of the Dow Directions.